Even if a bond doesn't perform as well as it's supposed to be, there will be trades happening. When there's volatility, when there's trades, when there is listings, when there is any sort of liquidity in the market, you will always be making money.
Ownership is changing and most people haven't caught up yet. From the MKK in Munich, I'm Lyndsay Malchuk with Appeton. Now, assets that were once out of reach, real estate, private markets, are now being broken down, digitized, and made accessible in entirely new ways. And the platforms leading that shift aren't just innovating, they're redefining how investors interact with value itself. FINEXITY is one of those platforms sitting right at the intersection of technology, of regulation, and capital. And leading that charge is someone pushing this model forward in real time. Joining me now is Paul-Maria Huelsmann, CEO of FINEXITY AG. It's so great to meet you in person.
Thank you very much for having me, Lyndsay.
How has the day been for you? Day one?
Crazy busy.
Very,
very busy.
And
back-to-back meetings.
That's what we want to hear. Yeah. Absolutely. Well, let's kick it off because I know we don't have a lot of time, but let's really actually kick it off with your origin story.
Well, if you were to summarize it in one sentence, we are building the leading exchange for tokenized securities. So we're pretty much similar to the New York Stock Exchange, and they're in fact building their own tokenized exchange at the minute, where they will be able to trade 24/7 tokenized securities. So that entails bonds, funds, and as well as equities. So for us, we started off in the bond market. We've got over 250 bonds listed on our exchange. They're traded 24/7. So there's not a single time that we've had since 2021 where there weren't any trades. So we're really defining liquidity in illiquid markets. We're pushing new asset classes, underlying asset classes across corporate bonds, infrastructure, collectibles, but also infrastructure. Yeah, so this is what we do.
Wow, there is a lot going on over there. Now, with that, I know that there is a lot of growth and there's a lot of evolution that comes with that. Talk us through where you were at the beginning and then where you are evolving to today.
I mean, if you go back to 2018, when we just founded the company, there was no regulation in place. So we were pretty much one of the only ones in the space. And we actually formed the regulation in Europe with the regulators.
I was going to ask.
So that's one of the major changes that have happened. We're now at a point in our space where it's becoming very institutionalized. And that is only because of progressive regulation over the last couple of years. What's quite interesting, to be honest, is that in Europe in particular, and that's not the case in the US, but in Europe, we don't really have a harmonized capital market. There is 350 different exchanges in Europe alone, out of which you've got 150 multilateral trading facilities, which are your electronic exchanges, in other words. Yeah. And in the US, you've got the New York Stock Exchange, and they're pretty much the number one player, right, when it comes to the trading of securities. So now what's happening in Europe is that through the license that we're currently in the process of applying for, we will be able to build a pan-European exchange. So it's one license that allows you to actively be involved across the whole of Europe, which is obviously then allowing us to harmonize European capital markets first. That's one thing. What else has happened? There's a lot of institutional money inflow. Bond sizes that are listed on our exchange are getting larger and larger. We've had over 84,000 investors actively engaged in our exchange. We've incorporated our infrastructure in around 70% of German banks that can directly execute their orders through our trading venue, which is a first heard of thing as well for the European capital markets, or in particular German capital markets. So that really makes FINEXITY one of the global leaders when it comes to tokenized securities. And that's where we're at.
Wow, those are some pretty big catalysts. I mean, where do you even go from here? That's the thing. Well, with that, I'm sure that there comes some liquidity challenges as well. So let's actually just really address that. Critical for any exchange model, of course. How are you actually solving all of this?
Yeah, and that is 99% of all companies that have tried to engage in the same business that we've been building for 7 years now have actually failed. So there's not really many players around anymore. I was just on the phone to one of the only players that really is still alive, and we cooperate with them on a significant basis. So we've got a lot of business that we do together. And I think what really separates us is that we've always been able to build technology, but that technology was built around the needs of the broker dealers out there that actually have their clients. Because we don't believe in the B2C fintech world, because B2C fintechs are super heavy to maintain. You have a lot of marketing spend in order to win the end clients. So our business model is more like an infrastructure business model. So we sit in the middle between the parties that are issuing bonds, they're listing them on our infrastructure, and then we help fundraise for them, but we connect them to all the partners that are directly integrated into our exchange. And those broker dealers, they are wealth managers, they are corporate banks, they're cooperative banks, they're typical investment banks, securities trading firms. So they are directly connected to our exchange, and they just obviously do the distribution to their clients. So once their client subscribes, we just get the order, and that's it. So we sit in the middle, and that really has changed the game, obviously, for tokenized securities, because B2C distribution is always very, very costly and very limited if you want to do it yourself. So liquidity comes by incorporating the trading partners for them to drive liquidity as one part. We obviously have our B2C distribution as well. And we've actually just signed a contract with one of Germany's largest media outlets. They own 71 weekly newspapers. They own 1 daily newspaper. They print 3.6 million newspapers per week. And we've been granted a 20 million euro annual marketing budget from them just to build our B2C distribution channels. So that is obviously scaling our own B2C distribution, plus 70% of German banks are connected to our exchange. Plus we have multiple wealth managers as well. And through further M&A acquisitions that we have made and will continue to make in the near future, we're driving primary market distribution and therefore also secondary market liquidity.
I mean, what more do I even say to this now? That's the thing. Now, there has to be also just some challenges that you're facing with the market as well, getting your story out or education. I mean, what is it that you think the market just doesn't quite understand about Finexia quite yet?
Our business, I think it's understanding that irrespective of whether markets go up or down, we still make money because we sit in the middle, right?
Hold up.
So
doesn't matter what the markets are doing, they're still making money, people. What?
Exactly, because we sit in the middle, right? We work with the issuers that need the money. We can facilitate the primary market the primary market distribution.
Right.
We have our distribution partners, so we make money on every single trade that goes through our infrastructure. Even if a bond doesn't perform as well as it's supposed to be, there will be trades happening. There will be discounted trades, right? They're not going to be trading at the par value anymore, but they will be trading at a 10%, 15% discount. But there will be trades. So on every single, and that's, I think, the beauty of every exchange infrastructure kind of like company, is that when there's volatility, when there's trades, when there is listings, when there is any sort of liquidity in the market, you will always be making money. And I think that is the greatest gift that the company has. And that obviously is complemented by our own capital markets team. So what we've built in the last couple of years is an engine that allows us to, from the minute you have a capital requirement to the minute we would usually make sure that you've got the money in your bank account sitting, and usually it's only 4 weeks with us. So we are much faster than any investment bank out there in the niche market where we operate.
Well, let's talk about your long-term vision then. I mean, like you have said so many amazing things. Where do you go from here?
Number one, in 5 years' time, if we were to sit here together and talk about FINEXITY, FINEXITY is going to be the number one pan-European exchange for tokenized securities.
Okay.
We'll be trading bonds, funds, as well as equity on our exchange, hence providing more liquidity to capital markets with a quicker settlement system, less clearing hassle, and a more efficient capital market in the end. That's number one. Number two, we will have grown through a lot of M&A because we believe in M&A. Any exchange will succeed or fail based on its liquidity power. And we can drive liquidity through our B2B partners, so the banks and everyone. But also, you always want to have some sort of independence of them, right? So if they decide that then don't like bonds anymore, they don't like funds, they don't like equities. I mean, I don't think this will ever happen, But just to prepare for the worst, we also studied our own distribution channels. And those distribution channels we're actively buying up for our M&A strategy. So that's another point. And number 3, I think that's another big picture, is that we will be active in Europe, but we will also have overseas business. Again, because I believe we live in a very geopolitically unstable world at the minute.
100%.
I mean, it's quite, to be honest, quite frank. I mean, you should never really say this, especially on camera, but the war has been quite good for our business.
We're hearing that a lot, actually.
You know the reason why? Because Wall Street is currently driven into 24/7 trading. The war broke out on a Saturday, and everyone wanted to trade, right? But everyone had to wait for Monday. So I think with tokenized securities and the ability to trade 24/7, it's going to be a massive game changer for capital markets.
Absolutely.
So,
And, when we look at, there's a pattern, that's happening with the war too. And so people are actually not really looking at, per se, what is happening in the markets. They're looking at his phone. What's his pattern? And if you figure out that pattern, you're going to make bank 100%.
Exactly.
And that's what's happening in the markets for sure.
Yeah, true.
Well, I mean, it's been a great conversation, short
Thank you
but
very
great.
much.
And I cannot wait to have you back on the show and we can talk further about this.
Thank you very much for having
Absolutely.
me. Thank you.
100%. Now, this is where access meets innovation. And as more investors look for alternatives, platforms like this become increasingly relevant. FINEXITY is clearing part of that next wave. Thank you for watching. I'm Lyndsay Malchuk with Appeton. Stay here. There's more to come.